Welcome back to Anything Related to Tesla Shares, everyone. Regarded as one of the best EV stocks of the previous year is Tesla. With overall returns of 18.4%, the company's shareholder returns of 9.7% are outstanding when compared to the U.S. market. However, Jim Cramer of CNBC broke some startling news regarding Tesla shares in March of this year. The host of Mad Money stated that, despite his former optimism towards Tesla, he now favors Ford over Tesla stocks. To learn more about that, watch the video through to the end. To be informed about all that Tesla is up to, remember to like, subscribe, and enable notifications before we get started. Jim Cramer is an American TV broadcaster, as many of you are aware, best known for his investing advice program Mad Money, which has been shown on CNBC since 2015. Though by no means all of them, several of his stock recommendations on the show made listeners who invested a lot of money. That being said, Jim isn't afraid to share his thoughts on many equities, including Tesla's, with a large audience he has amassed over the years. In the past, Cramer co-founded TheStreet.com, a website that provides financial advice, and he was also the founder and manager of the multi-billion-dollar Cramer-Berkowitz hedge fund. He is also a well-known writer who writes on investing, money, and achieving financial success. Jim Cramer was a fervent advocate of Tesla stock for a few years. After taking his daughter's Tesla for a spin a few years ago, he fell in love with the brand. He has been a fervent supporter of Tesla stock ever since. Nonetheless, Cramer stated in a March interview that he thinks Ford stock will outperform Tesla stock. In order to dominate the electric vehicle (EV) market, Ford plans to produce roughly 2 million electric cars by 2026. Cramer claims that Jim Farley of Ford never creates anything that is not profitable. The rise in Ford stock price after Farley became the company's CEO in October 2020 lends credence to this. Additionally, he has been pushing the business to move from internal combustion engines to electric vehicles, putting it in the same market niche as Tesla. Excuse the pun, but a while back Jim Cramer said that Elon Musk's Cybertruck would be his first failure, and he slammed Tesla. Considering that Cybertruck hasn't even been published yet, there has been a lot of anticipation and pre-sale orders placed, and a drop is scheduled for mid-2023. This is a really odd remark. In addition to criticizing Tesla's vehicle, Cramer advised viewers to purchase an electric Ford F-100 Lightning L electric truck, which is an electric variant of the well-known American pickup. We now see Jim Cramer's point of view, and it's possible that he is correct in predicting that Tesla will soon have fierce competition in the electric vehicle industry. Cramer may, however, still own some Tesla stock. Cramer is obliging to point out, though, that Tesla is not a corporation that only makes electric vehicles. That is not all that is happening quickly as AI advances. In recent years, Elon Musk has concentrated on developing a fully autonomous car that does not require a driver, in addition to introducing tiny features like voice control and self-parking to Tesla vehicles. The primary artificial intelligence component of Tesla is autopilot. Andrej Karpathy, Tesla's head of artificial intelligence and autopilot vision, claims that the company's goal is to create a synthetic animal, a car that can move on its own and perceive its surroundings in addition to reacting sensibly to them. Each of them is a component of the internally constructed synthetic animal. Tesla also wants to improve the intelligence and security of its self-driving technology. When it does take off, it will perform noticeably better than human driving, which will enhance driving conditions overall. It is quite unlikely, though, that once self-driving technology is available, consumers will want to purchase traditional cars. Not to mention, Tesla is looking into using their AI unit for something more than just autopilot. They want to build a Tesla bot. This device is a humanoid robot that will replace laborious or hazardous duties, thereby enhancing human lives. Taking into account that Tesla is actively developing its non-vehicle artificial intelligence projects in addition to being fully committed to developing its cars. So, it remains to be seen how Cramer can continue to take the company into the auto industry. Upon examining Tesla and Ford, it becomes evident that they operate in entirely distinct marketplaces. In the segment, Ford is coming up to Tesla, but there are still rival companies. In terms of AI advancements, Ford is likely a whole generation behind Tesla, even with its driver assistance tools. Thus, why did Jim Cramer stop endorsing Tesla? The general macroeconomic volatility, which has many analysts forecasting a global recession, is one of the solutions, though. Cramer is not one of those experts, though. Regarding the market, he is optimistic. And if certain things go perfectly, as Cramer stated, equities are undoubtedly about to soar. He stated in a recent interview that investors' perceptions of the stock market might be influenced by a variety of economic factors. Choice on the purchase and sale of positions. One of the key variables, in Cramer's opinion, is if the Federal Reserve chooses to start a soft landing. This will assist control inflation and prevent recession in the future. Everything doesn't have to go perfectly. Just small adjustments are needed. And oil price decline might be the solution. The same could be said for any number of data points showing a decline in inflation. Cramer also mentioned that a rising stock market, in the absence of news, is a very good indicator. It's quite obvious from all of his comments that Jim Cramer has a very positive outlook for the stock market going forward. Now, let's return to the first query. Why, if he believes in the market, is he not bullish about Tesla stock? Initially, it could appear that Jim Cramer has only focused on an electric vehicle startup that isn't Tesla. A closer examination reveals that this is untrue, though, as the expert has not endorsed any other manufacturer of electric vehicles. He stated, for example, that he does not believe U.S. EV manufacturer Rivian will become the next Tesla. Conversely, though, it's a rather ugly truck manufacturer. In addition, he said that it would be preferable for Ford to sell its Rivian shares and offered a positive statement regarding General Motors. Cramer believes that General Motors CEO Matty Barrett is doing a decent job, having established a robust van department. After carefully examining every one of the aforementioned Cramer quotes, we can now conclude that the expert has changed his opinion on investing in general and now favors traditional automakers with a solid track record. Even though Cramer believes in value stocks, they have faced difficulties recently due to extremely high geopolitical tensions, rumors of a new COVID wave, and an outbreak of monkeypox. These factors have had a negative impact on the stock market and the global economy as a whole. Tesla is hoping to attract more customers as a result of higher gas prices brought on by the conflict, despite the extremely tight macroeconomic conditions. Considering the rise in Tesla's stock price, this is already apparent. Given that electric vehicles are more affordable, more and more consumers will choose them if the conflict persists. Given that Tesla is the market leader in electric vehicles, a significant shift in consumer preferences will undoubtedly have an impact on the company's stock price over time in terms of upkeep. The change might have a significant effect on Tesla's pricing as it exceeds its 2026 goals. Jim Cramer is right when he based his opinion on data and past economic cycles. However, it is imperative to incorporate customer behavior, which frequently depends on an enormous array of interrelated aspects. Although the exact reason behind Cramer's betrayal of Tesla and Elon Musk remains unknown, it is certain that Tesla is focusing on artificial intelligence in order to secure a stable future. It's also critical to keep in mind that, although Tesla is a growth company and so tends to be riskier, it can also generate significant financial rewards. Thank you for observing. Please enjoy this video and check out our other ones. While you're here, make sure to subscribe to the channel as well. Select either of these two videos that are displayed on your screen. I'll see you over there.